The first week of November wasn't too good for cryptocurrencies, especially Bitcoin and Ethereum. Bitcoin traded choppy at $23.50 in the European session, crumbling below the 61.8% Fibonacci retracement level of 21,000. The reason behind this tug-of-war between buyers and sellers was the FOMC and Fed Fund rate decision pending in the first week. The Bitcoin price traded in the green within the Asian session with a 20,534 support level, while Ethereum increased by less than 0.5% to 1594. Rumors had it that it's on the way to the 78.6% Fibonacci retracement level. Overall, Bitcoin increased by more than 5% in the last 7 days and was expected to pump up by more than 10%. Unfortunately, it plummeted dramatically after Federal Reserve's interest rate decision was made. The Federal Reserve announced another rate increase in the middle of the week with a full 0.75% spike. The interest rate saw a surge to slow down the inflation rate, which has engulfed Europe. The continued interest rate hikes impacted Bitcoin, with the currency unable to break above the $21,000 level. However, things started to look up as the week ended, with a bullish trend observed in Bitcoin. As attention shifted to the next U.S. interest rate announcement, Bitcoin climbed above the ladder to trade as high as $20,888 on Friday, before closing at $20,755. News from the world. Moving over to the news from the world, the financial services group, DBS, announced that it's one of the first global banks to test foreign exchange and government securities trading with DeFi liquidity pools. This testing will serve as the gateway to explore the economic potential and value-adding use cases of asset tokenization. On the other hand, Union Bank of the Philippines is live on Medico's flagship platform, Harmonize. The bank announced the launch of a pilot program for Bitcoin and Ethereum custody and trading services, although it will initially be for select retail customers. Crypto crimes at a glance. In Japan, more than 3,000 people were duped in an alleged Ponzi scheme where a firm pledged the investors to pay in a worthless crypto asset. The victims were tricked into paying for rented USB devices pre-loaded with popular apps. The renters were told to expect regular payouts, but they became extremely rare until the company finally issued a worthless crypto asset called Vcash Coin, something no major crypto exchange has in its list, and therefore could not be exchanged for cash. South Korea remains in our news this week as the local police arrested the ringleaders of a $472,000 crypto fraud gang that used a group chat function on a social media app to scam unsuspecting victims. Predictions for the second week. And finally, all eyes are on the second week of November, with the hopes that it will break through the $21,000 level this time around. Will it though? Only time can tell.